I don't know if my screen cut out there for a second, but
Huh.
good morning, guys. Welcome to today's episode of Market Check. There is no second best daily YouTube live stream to talk about markets. I'm glad they didn't have to make me say that twice, but I'm Snorlax. You guys also know me as Tommy. I'm joined by Max and hopefully a few other of my teammates as well here in just a few minutes. But hard to believe it's already Friday, guys. I hope that we've had a great week. Like we've been discussing throughout the week, it's been a very volatile week, a very volatile time period for markets as we approach the inauguration of Donald J. Trump. And of course, all of the movement that we've had in certain proxies that have been causing a certain amount of strain on the market recently, right? Like the dollar, bonds, and yields. Everybody's favorite topics, I know, but we're going to be talking about those, of course, today, as well as how they will impact the prices of our coins and, maybe any favorable altcoin setups that we have in the meantime as well. So if you have anything that you want us to take a look at today, anything in particular, you know what I am about to ask you guys, and that is, can you please hit the like button for us? We would be very, very appreciative. Of course, when you do that, we're more likely to look at your suggestions in the comments. We're going to chart most of your favorite assets. I can't say all of them because we do have. I will say we have a pretty degenerate audience. You guys love to offer up some very low cap tickers, so we might not get to everything you suggest, but we'll certainly do our best. And of course, talk about all of the important ones too: Bitcoin, Ethereum, Solana. Equity markets, which, like I said, I know it's not the most exciting thing right now, but it is playing a big role on the pricing of, our favorite assets. So make sure to hit that like button and we'll do our best to cook you guys up a delicious meal. But yeah, I mean, I feel like we might as well start the show talking about that super manipulated price action we had over the last 12 to 16 hours. When I woke up this morning, I had a text from Max, and he was pointing out really like what looked like a twop, right? Basically, since Asia session, a very manipulated, slow grind in price. We talked a lot about kind of some of the abnormalities in the flow this week. It's just purely on the 15-minute. You look at the way that Bitcoin's traded off of RSI, off of EMAs, very traditional momentum signals. It's been respecting them to a T, which to me signals that, okay, well, somebody is sitting on the ask. Somebody has been walking price down. In Asia session, somebody was walking price up. And it seems like they closed their longs right on the data release this morning, which, I mean, we can talk about that as well. It doesn't really seem like it's going to have too big of a shift, I think, in as far as the way the market's trading right now. But of course, the print was good, which means it was bad. At least that's what the macro people want you to believe. We'll probably discuss that today a little bit. But yeah, this price action on Bitcoin looked very manipulated this morning. We got an ending that I think would fit the price action that it was. So now we just go to see what majors are going to be doing next. Of course, what altcoins are going to be doing next. And most importantly, what equities are going to be doing next. Because as I've already said twice, as unexciting as bonds and yields and the dollar can be, unfortunately, they are very important for where we are in the current stage of the market. So we do need to, if nothing else, even if we don't talk about them, we do have to keep them in mind. But Max, what are your thoughts on the shenanigans that have happened, not just over the last 12 hours, but really over the course of this week? And of course, your thoughts, I mean, if you have any on the macro data print, it really doesn't seem like anything was too out of the ordinary, but we know that these are always functions of positioning more than anything.
Yeah, I agree with that wholeheartedly. Well, first of all, good morning, guys. This is I don't think I've ever seen price action quite like this before. I woke up to this, and I immediately texted Tommy because we had kind of a loose plan for our fund, like what we wanted to do going into this morning. And I just saw that and was like, oh shit. And I think I texted him like, whoosh, or something like that. Because here's the thing. It doesn't matter what the data is. Like like Tommy said, it's more about positioning going into it. And I don't know whose twop this was. I could figure it out just by looking at like the CVD delta on all the major exchanges. But somebody was twopping overnight and thought that was a good idea. And it was so obvious that like as soon as the data came out, we were going to get a whoosh, whether it was good or bad. So what did I think about the data? Well, objectively, it was good data, right? U.S. unemployment came in under expectations, meaning Americans have jobs. Payroll data, fine. Everything looked fine to me, right? And I think there's been this narrative that's been circulating Twitter on like the past, I don't know, I feel like maybe a couple of weeks where somebody came up with this and everybody was just like, I accept that. That is the truth. That is the narrative. And they're like, markets are going to throw a tantrum. We need bad economic data so that the Fed has to intervene and markets are going to throw a tantrum. And they kept saying tantrum, we're going to throw a tantrum. And I'm like, okay, I don't think people are viewing it correctly. Like, we don't want, in my opinion, we don't want poor economic data with higher than expected initial jobless claims and higher than expected US unemployment. We don't want that. I understand like what they're talking about. What they're talking about is like the market wants more rate cuts. What's going to give them more rate cuts? Poor economic data, Fed needs to intervene. But emergency cuts are not the same thing as mean reversion cuts, which has been the wind in our sails this entire time. Right. So I think that a lot of people are like, oh, we wanted a miss this morning. We want Americans, on the streets. And then the Fed has to intervene. We get more rate cuts and we go up. But it's this weird, like, mental puzzle you kind of have to try to like work through to figure out what the market really wants. But I don't see a world in which like strong payroll data and strong employment data and the Fed just pausing, even if we don't get a cut, even just the Fed pausing, a pause is bullish. That means, hey, there's nothing that's in contraction to a degree where we need Fed intervention. And it's also signaling, hey, inflation is not going crazy. We don't need more hikes. That's at least how I view it, right? And I'm happy to, go back and forth with somebody on that. But I'm like, in what world did crypto bros start rooting for high unemployment to pump the market? That's the most lopsided, backwards shit I've ever seen crypto bros come up with. There's no tantrum. The tantrum is, Bitcoin loses this range low and I throw a tantrum. Not that we need Americans out of jobs. That doesn't make any sense to me. So good
I
print
agree.
good print this morning with a positional unwind that was extremely obvious. So it's like we just kind of have to see what happens. It's a Friday. We got good economic data. We saw some idiot twapping overnight. Let's see how this resolves, right?
No, I agree. It is funny how much a few months can change your opinion as far as like what is impacting the market or what our perception is as far as what's impacting the market. I remember not even 3 or 4 months ago, everybody was like, well, do we really want rate cuts? And so obviously you're rooting for different things with unemployment. Now rate cuts are perceived as a good thing because yields have been going obviously much higher. But I'm kind of leaning that I'm going to sound like a broken record here. A big surprise, at least at the beginning. But obviously, I'm expecting the dollar and yields to kind of be hitting their inflection points more or less at the time of the inauguration. But I do think that you can continue to see yields, and the 10-year I think is up about 1.2%. Continue to see yields go higher, but the inevitable reality for yields is that you will probably see Trump intervene at some point if yields are going to cause the market to continue to throw a tantrum. And I think that's the key point here. Is if yields continue to get skewed, at what point does the president, or at least the next president, step in? Because I think it's pretty important for the next president to want to make his younger base wealthier, for given a lot of different reasons, right? But that's just kind of that's not the reason, but I do think that will play a role, and that we do probably see yields top. But we might not be there yet. And obviously, the market can continue to throw a tantrum. I don't think that this economic data really did anything to squash those fears, but I also don't think that it did anything. Like you were saying, Max, I don't really think it did anything to accelerate things. It's just kind of what's going to happen is going to happen pretty much regardless of the data that we got today.
Yeah, it's all positioning. I, for one, like, look, I'm cautious here, right? I'm a little bit cautious, like, as I think you probably should be, sitting on top of like your 6 tap of high time frame demand, you know. And I'm a bit torn because I think that on one side of it with Bitcoin here specifically, I'm extremely bullish over the next like 6 to 9 months, right? Trump takes office. I think a lot is going to change really quickly. Um, I also recognize that this move, this move is a little bit crowded right here. That sweep, the long awaited, you know, here, let me get rid of the volume profile. This sweep right here, I think is a little bit crowded, not that it can't happen. And at the same time, I'm also a little bit torn because on some exchanges that wick already got taken out. Here's the wick on Coinbase, right? So I'm a bit torn because we don't have our charts all in sync. Like some exchanges, we had this like super obvious wick get taken, and then you know over here on Binance, we didn't, right? So Coinbase we did, Binance we didn't. This feels a little crowded to me. I also there's another side to it where I'm like, there's a lot of people that are bullish and want to bid below this wick, right? What if we just never gave it to them? You know, and it kind of reminds me of, like, for example, it reminds me of this wick that we had on the Binance chart over here. Okay. It was, let me go to like the 12-hour. It was this wick right here where everybody, me included, I really wanted to see this wick get taken out right here. Like this was so annoying to me that we didn't take this wick out. And it started to feel a little bit crowded. And at the same time, we can look at this. We could look at Coinbase again over here. Don't know what this is. So Bybit up top and Coinbase down below. And you can see in a similar fashion, Coinbase took that wick and Bybit didn't, right? And this was feeling a little bit crowded to me. And then at the same time, so you guys see this. Let me add another chart up here. Okay. And at that same time, I also see people calling for the CME gap right here on Bitcoin, which, yeah, I see the gap, right? Like it's giant and it's obvious and it's clearly there. I saw a lot of people, myself included, that wanted, let me go to the daily. A lot of people, myself included, wanted this CME gap right here. So we are seeing some similarities in the sense that we've got some confluence where we have some exchanges that took out our current wick. We have some that didn't, similar to what happened here in like September. And additionally, you have that kind of the obvious CME gap confluence that we had again, you know, where everybody, not only did they want the wick to fill, but they wanted, you know, the CME gap would have been like, you know, around here. They wanted that obvious CME gap. So to me, it actually feels very similar where like there's a chance that the market just kind of gets like maybe we don't get those obvious levels. This is the closest example that I can think of it. And I don't know how you feel about it, Tommy, but when I look at it, it feels like it's a little crowded down there and it's a little obvious and you might not get your fill even though I could see the case for it. I'm just a little torn on it because we've been sitting here for so long, you know?
Yeah, I think I mean, the biggest thing with Bitcoin ultimately is it's a range until proven otherwise, right? We're trading above 90K. We've been above that level for, I think we mentioned yesterday, almost 2 months. I can't believe, for one, that we've been up here for as long as we have. But
Oh, Tommy, I think you're rugging a little bit. Just a soft
yeah,
rug, not a full rug.
I'm trying to fix that. It should be good. But yeah, I mean, we've been trading above 90K for basically 2 months. So it is a range until proven otherwise. This is not the place to be entering a fresh perpetual future.
Oh man, it's looking bad, Tommy.
Come on. I know.
It's looking
I don't know
real
why
bad.
it's doing that. There's no reason it should be doing that.
Not a single reason.
Not a single reason, but
Not a single reason.
Champions adjust. Champions adjust. We're gonna figure it out.
We're gonna get through this.
But okay. So I don't get interrupted by the connection again. This is not the spot to be opening up a directional swing short on the market, right? Hedging, fine, if you think we're going to break down, but swing shorts at range lows. So this is the type of area where you can get trapped. It's just a question of kind of what we've seen from flow. What does it mean for price? I kind of, like, with how systematic the selling has been this week, I kind of think that we're probably seeing some sales of that U.S. government, that Silk Road Bitcoin. Maybe it's not from the wallet per se, but it definitely feels like the type of price action that we've seen before when those headlines come out. So is this guy going to be done sitting on the ask in the near term? Because if he is, then we can absolutely get lifted. He's the reason why we are trading where we are. And maybe it's not just one entity, but during New York session, we've been seeing this very systematic sell algo pretty much all week. So really just kind of waiting for him to finish up. And then I think you could see price lift. I kind of remember price action like this from as far as like what we saw this week. I remember it after the ETF was officially approved. I think in that upper 30s range, or like, yeah, high 40s down into to mid to high 30s. Right after the ETF approval, I want to say we saw a flow that kind of looked like this. So he eventually finished up. And if he does the same around here, then yeah, I mean, you're going to know, and it's going to be a pretty quick momentum swing, the type where a lot of highs get run pretty quickly. But when you look at kind of the market structure, I think for Bitcoin, a reclaim of 95K is contextually very significant, because you anchor a volume profile from our big squeeze candle that we had on Monday, right? The fake out. Trap longs. If you can reclaim 95K, that's the value area low kind of anchored from that candle. So I kind of think that's the level for Bitcoin to flip, and then you go retest the all-time high again.
Where did you start the anchor, Tommy?
From the first squeeze up candle.
Like so, here?
Yeah, right there.
So you think if you, well, what exchange? This is Binance.
Coinbase.
Coinbase. Let's see here. Oof, mine is all weird.
Let me see if it shifted after the volume we put in this morning.
I mean, I have to admit, the range trader in me looks at this and is just salivating, right? Where you hack, I mean, look, yeah, it looks a little scary, but at the same time, like there's no reason really to go back below this. I don't think, like, if we're gonna hold, I feel like we should really hold here. I mean, it's a beautiful, beautiful 3 drive into the low, man. I mean, that is, and then on the Coinbase chart, you took out, this liquidity. So you took out buy side and sell side. Boom. Right. I'm like, I don't know. I mean, I really can make a case for us just holding here and leaving everybody like, everybody blue balled, like everybody wants to see that like glorious final puke. And I'm kind of like, I don't know. Like we've been sitting here for a while and we got absorbed. Like I feel like if we were going to break down, it really could have, probably should have been right here. I don't know. I really feel like it should have been right here where, you kind of got stuffed here. I mean, because here's the thing, you got this initial reaction off this low and then they sold it right back down. I feel like they should have sent it down here and then churned at the range low and then rolled it over. But we're holding, we're holding. So I don't know. I don't think
I
it
think a
looks
little
bad.
bit.
It's
It's
just
going to come
scary.
down to what equities do here over the next week.
Yeah. I mean, it's possible. So I was actually looking at this. I was looking at this morning. It was this pair. And actually, this is Bitcoin paired against the NASDAQ. And this is a really clean range as well right here. I mean, this is an alpha pair, man. You guys got to watch this one. But this is, I mean, look at that perfect, the hindsight rejection, right? It's really, really clean how this thing trades. So, when I look at this, I'm just kind of like, am I bearish this structure here? This is Bitcoin against the NASDAQ. So I think it's like, to me, the bottom feels like it's in on this pair. So the question is the NASDAQ going to puke, right? If the NASDAQ pukes and this ranges, well, Bitcoin's going to go down with it, right? But to me, this doesn't scream like it's about to completely puke. It looks like we've been holding this floor pretty well, at least for now. But I mean, this doesn't look bearish to me here. We're just in a range, right?
The only thing I don't want is another 6 to 7 month range. Anything but that. Anything but
don't
that.
even say that out loud, bro. Don't even. I can't do that. I can't do an 8-month range. I mean, I guess I have no choice, but I don't think that we will. I don't think that we will. But this doesn't look bad to me yet. But let's take a look at the NASDAQ.
I think you really want to be seeing these indices bottoming here, or else I'm going to assume that probably two things. The 10-year is going higher and volatility is going higher. And those are really, I think, the two most important pieces in all of this.
Yeah, the VIX was perking up this morning. Looks like it's still kind of hanging out. But yeah, I mean, I could see a case for it holding here. But we're really going to want to see the VIX start to sell off here. We're going to want to see that happen sooner rather than later, right?
I mean, the VIX is definitely going to get crushed, you'd think, in about 11 days, but it's like this small window of time where we don't have a rate cut this month. We've got kind of this like perfect storm of all of a sudden headwinds into the inauguration that will become tailwinds after. But right now it's just that small window where, yeah, maybe we get some reflexivity into the inauguration. But
yeah, I don't know. I mean, look, here's the thing is like, I could see a path for the NASDAQ going, down here, maybe. But I would like to think that we can hold this high right here, but our trend is still intact. And that's the thing I think a lot of people they're not considering as well, is that like we are in very much so like a high time frame structured uptrend. And even if this is going to roll over, like it would take like 4 or 5 months to really roll over. Like it would end up looking something like this. Like you'd bounce here and then you'd finally drop and then you'd come back up and then you'd sweep the low and then you'd come back up and then you would drop, right? You're talking like literally middle of next year or something like that. So yeah, I don't know. I'm not bearish NASDAQ at all. I'm just like, well, we're in an uptrend. We could pull back, and we got a lot of wiggle room.
Yeah, I agree. And I also want to point out the positioning on volatility is nothing like what it was. You compare it to the end of 2021, beginning of 22 top on equities. The positioning and volatility is nowhere near that for two different reasons. The first of which being there's no froth in call skew. We are nowhere near where we have traded in previous cycles as far as pricing goes for very aggressive options, for long tail options, really just call options for things like the Mag 7 in general. So I think for one, we have a lot higher in the skew that we need to go before we were to achieve levels similar to where we topped during the last bull market in equities. The second reason, and we've talked about this before, but in 2022, volatility was very well supplied. There's a reason why the VIX, despite the fact that we were in a very long-term and maintained downtrend in equities for like an entire year almost, or rather like 8 or 9 months, the VIX still never spiked above, I think it was like probably 30 or 35 during that period. And that was because people were ultimately very well hedged. It leads to more stair-step price action rather than obviously like the the huge spikes we've had over the last few weeks. People are not super well hedged for volatility right now. If you were to have any sort of downswing in equities, it's likely to be quick rather than something very drawn out. And I think when you zoom out as well and just look at like the S&P and the NASDAQ on something like the monthly chart, they're not really in a position where you're going to see a drawn out downtrend. You're going to see, I think, as equities continue to kind of enter this parabola caused by excessive stimulus and excessive printing of money, the drawdowns are going to become a lot more quick, and probably the recoveries as well, because I mean, just look at the verticality of it. There's not really much more room for anything else. And I definitely don't think that the equities parabola has topped. I mean, certainly not. I think we have a ways to go before that happens.
Louis, welcome to the show.
Thanks for having me. Been a while.
Yeah. How you doing?
Good. How are you?
How you doing?
How you doing?
How you doing?
How you doing?
Louis, I watched what is it called? Goodfellas on
Oh, it's classic.
Yeah, on an airplane. And like whenever they talk, I'm like, that's my boy Louis. Like that's how he talks.
You hear a little bit of that in me?
I hear a lot of that in you. I'm pretty sure that you're in like the recycling industry or trash or something. Yeah, I'll take your trash out. Yeah.
You'll be taken care of. All right.
Yeah. Yeah, I want to be a friend. Yeah. You like friends, don't you?
Everybody needs a buddy.
Yeah, I'll be your buddy.
I'm feeling pretty good this morning, honestly. Feeling pretty good. I like these days where we get either a news event or a market data, economic data drop. Just because the market tends to overreact, knee-jerk reaction. And usually those knee-jerk reactions, or whatever you want to call it, usually they cause pivot points in the markets, where one side gets offsides. I think the dollar's a little offsides here. I'll be looking for, I think, going in from now for the next week, looking for signs of a blow off top on the dollar, and as well as yields, right? So we will see, but I'm liking the bearish sentiment. I'm liking what I was watching CNBC this morning. All of a sudden, a strong economy is considered a bearish thing. A strong economy is never a bearish thing. I don't care what anybody says. So I'm liking people are just not thinking clearly, in my opinion. I think the markets are a little offsides. So we'll see what happens. We will see what happens. But feeling a lot better than I, over the last couple of days. Like today was I saw a lot of things I liked this morning. So we'll see how we end the day.
I'm very interested to see how next week trades. Very interested, because I feel like really the wild card. I said this in my channel because I think, you know, you could see continued stair step from equities realistically until Trump gets inaugurated, and then you see things like the dollar and the yields top out. But the wild card is not economic data. I think it's volatility, which we already talked about the VIX. I know, but it's just kind of a thorn in the side right now. And we've talked a lot about already over the last few weeks. The market in 2025 volatility will be higher, whether that's because prices will be moving up with it or because prices will be moving down. And I think until you have probably the stimulus that comes with the first 100 days of the new president, volatility is a headwind. But after that, it becomes probably a tailwind for the market to potentially, you know, move higher quite aggressively.
Louis, what did you see this morning that you liked? You said you saw something that you liked.
One thing I'm seeing is that gold is rallying, right? And I started mentioning this to the Discord guys a couple of days ago because I noticed it, because a couple, like, DXY is always something that I've used over the years, but I feel like there's times in the market where it's way more useful than other times. Other times it doesn't give as much signal, at least in the lower time frame. But I think we are coming into a point where the DXY, with the move that it's making, I think it's important to start watching the DXY again. So I noticed the other day that gold is starting to rally or continue to rally to the upside. It looks like it's ready for continuation, you know, after a little pullback here in a beautiful uptrend. And I'm noticing that gold's starting to rally to the upside when the dollar is also rallying to the upside. And normally, not always, but normally, you know, usually it's an inverse correlation where if gold's rallying, the dollar is usually dropping, and vice versa. And one thing I'm noticing now is that the dollar and gold have been both rallying over the last couple of days. And I, you know, that this could last for a little bit, but eventually, I think this ultimately, you know, one of them is offsides. Like one of them's lying, right? It's how I like to say. So like one of them's not telling the truth. And I think that's the DXY here. With other stuff I've been watching with the DXY, similar to kind of what we saw the DXY do in 2017, put in a massive bull trap to the upside before starting a year-long downtrend. So I'm starting to see signs where, although obviously we all hoping for the dollar to top, it's ran some key levels. It's filled FEGs. The gold is continuing to start to continue its uptrend and try to push for higher prices where the dollar is still shooting to the upside. That's kind of giving me signal here that the dollar is closer to a top than most might think. So I liked seeing gold rallying along with the dollar this morning. So I think that's a very telltale sign. As well as, you know, Bitcoin low time frame, we're still holding a range, right? I think a lot of people are missing the fact that although it looks kind of crappy, we're still technically in a range, right? And we're at range lows, and I'm liking the bearish sentiment at range lows. So just a couple things, and just the things that they were saying on CNBC, right? Like it reminded me a lot of like 2022 when like the markets had already bottomed, but no one wanted to admit it. And like they're just saying the craziest things about the Fed and what they were going to do, and overshooting how much the Fed was going to raise and how hawkish they were going to be. So just the things I was hearing on CNBC this morning just kind of made me laugh and chuckle to myself, and made me kind of believe that, you know, a lot of these things aren't making sense, and it seems that there's one side off sides a bit. So it's all kind of coming together for a massive bear trap, in my opinion.
Yeah, DXY really needs to cool down here. But I think that it should. I think we're kind of coming into some levels where they're more or less non-negotiable, right? And let's even do this together. I'll get rid of this here. If we were looking at this thing ultra high time frame, what I noticed, the first thing I noticed is look at where we topped last year, right? So to me, it certainly feels like one, you know, we this is our high time frame. got a hold region right here. But then I'll zoom in a little bit, and we have another one of these, demand zones right here, which now we're tagging, right? Which in theory, I think you would expect this to hold, in theory. I would be shocked if we saw like a new high in the dollar. I would be absolutely shocked. But I mean, looking at this structure right here, like this to me wants to be bullish. This to me wants to come back, test demand, and maybe this is like some, really predatory, kind of PO3 type of thing. Again, this is flipped just to kind of change perspective a little bit, but we're testing high time frame demand. And I think in theory, you would have to expect something like this. I mean, you have to, like, in order for risk to rally, we need DXY to stop chatting here. So I don't know how much of this is just like a crazy, like, blow off squeeze that we're seeing.
Yeah.
Or if it has any staying power. And I also don't exactly know, like, when Trump takes office, like, how quick can this ship turn around? I would like to think almost in an instant, right? But this is really what we're hoping for right here. And then at minimum, we would, we'd probably come down into here at least, it's a big level, something like this. But, we'll have to see. I'll save this here, but there's another kind of fractal we were looking at yesterday, which is here's what's happened when Trump took office in the past, right?
Yeah.
It was right here. So Trump took office right here, and we basically went down only for DXY. So, he takes office again right here. Will it happen the same way? No. Do I think it will happen? I mean, over here, look at the strength out of DXY. It was kind of doing the same thing, low key.
Yep.
It looked really similar, right?
It looked like it was about to rip to like continue ripping, right? It looked like it was a massive breakout. And the funny thing is, like you just shown, it's at the exact same time, right? Like we've seen this before, and it's even funnier that it's the same president coming into power. It's like we are the Matrix is matrixing, and it's honestly, I think it's playing like a big trick on a lot of the market here. So we'll see, we'll see, but that's kind of what I'm looking for.
Yeah, I mean, I have no choice but to root for it. Like, I own crypto. I have to just be like, this is going to happen, And it's not uncommon. Like, and this wasn't a Trump presidency thing here or whatever, but it's like we also had, a pretty crazy little bull trap. And I know this was COVID induced last cycle. So it's not uncommon for DXY to put in these like crazy traps before ultimately, reversing. But it's got to be here. Like, I don't.
The volatility on the dollar during COVID was absolutely insane.
Yeah, and that's one thing too. Like, I know we're looking to 2017, 2021 cycle, a little skewed, but I mean, we didn't really have a super bearish dollar during the last cycle either. So, like, I don't even think we would need a year-long downtrend like we saw in 2017. It kind of just chopped around at the lows during most of the 2021 cycle, right? And we still saw historic crypto and altcoin bull run. So, like, kind of just need the DXY to slow down, not necessarily a massive move, which I mean, I think we're going to move to the downside. But, we don't really necessarily need a year-long downtrend like we saw, in 2017. But this kind of has to be the area where we see it cool off, at least for a couple months.
And I don't think that it will be like on inauguration day, you see the dollar nuke 3 or 4%. It's probably going to be within the first 100 days, you see topping pattern, trend reversal. That's kind of my expectation for what we see with the dollar, probably more towards like March, April, May. You see the dollar break down more substantially, or at least like back into the range, start to trend lower. But Yeah, that's still the expectation. With I would literally be stunned if the dollar made a new high time frame high.
Me
I
too.
would literally be stunned.
So you
But
think, I assume because of how you're feeling about the dollar, you're expecting the 10-year to also be more or less topped within reason.
yeah, I mean, it might take like a few weeks for that because I think that is a little bit more complicated from a narrative standpoint than the dollar, but around the same time, and they trade very correlated. So
Yeah. Also at a key level too, which I like, right? The dollar, the yields, both kind of blowing off top like scenario into a key level, right? Where everyone's flipping max bearish, right? So, just some things I'm picking up on. Um, could be offsides.
This would make a lot of sense to me to top right in here.
Yeah.
It would make a whole lot of sense to me. Take
Another
out
thing,
both sides
I
of the
think they were
range.
calling for what's it at now? I think they were calling for 6%.
It's not going to 6%.
Yeah, and I just started
I
laughing.
could see a world in which 5 happens and we like take out the Schmiko top of this supply or something.
Yeah.
But
I guarantee they were calling for like 3% when we were coming into that deviation at the lows too. And they always overshoot.
Dude, okay. I'm telling you, I'm not gonna say any names, but this happened. Okay, this happened. I remember this really, really well. So
know.
TLT, which holy crap, this thing is just a meat grinder. I'm so
I think
happy.
I think TLT is going to make a new low. That's my only reason I hesitate to call the top on yields here.
Do I even want to look at TMF? It's probably so fried right now, man. TMF, let me see.
But probably basically at zero.
Oh my gosh. I haven't charted this thing in a long time. Here's the thing is like, unironically, there is going to be like a kingmaker trade on this chart. It's just going to be impossible to time. You're probably best waiting for like a break and then a retest of this, and just being late to it. I'm not interested. I realized I don't have an edge doing this, trading this, but I remember all the macro boys coming out when we were doing this. All right, when we were waterfalling down here. All right, I remember this quite well. And we were running a Twitter space right in here. They came out and they were explaining in such great detail, such vivid descriptions of what was happening. Oh my goodness, TLT and long duration treasury bonds are nuking because blah 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 blah, and there's a bond auction and blah 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 blah. And when the market opens tomorrow, I'm shorting, the long end. I'm shorting, because of this, and this. And what it has to do with more is positioning rather than like the data or what's causing something. So you are seeing, in my view, another kind of extreme, right? Where something is happening, you don't hear about it until it's already at the tail end. The macro boys come out and they explain to you exactly what's happening and why it's going to get so much worse, and then it reverses, right? And I think that's what we're seeing right now with yields kind of blowing off, DXY blowing off, and of course, subsequently, you're seeing bonds kind of bottoming here. And like, I would honestly say this is probably deep value for like the long end. Like if you were interested in just like shoving $1 gazillion into 20-year, treasury bonds, like nice. This is great. They're cutting rates and you're getting a double bottom on the long end. That's awesome. That's good value, right? Not that I want to do that. I own meme coins, but I'm just saying, like, I feel like we're reaching the extreme again. I do. I really feel like we're reaching the extreme, and everybody likes to tell you what's happening and how cooked we are, and then we reverse, right?
Yeah.
10 years not going to 6%. Like that's not happening. It's so unlikely that happens.
Yeah. So much so that the strong economy is bearish, right? Like,
well,
I think I did TLT at 79 or 78.
Dude, that's the crazy part, Louis, is objectively the data was good.
Yeah.
Right. We have a strong labor market. right? And somehow these macro bros are trying to convince you that like crypto would pump if more Americans lost their
Yeah,
jobs.
that doesn't
Like,
make
dude,
sense.
what are you talking about? Like,
I was laughing
some
watching CNBC this morning.
some
It was so
goofball
funny.
econ PhD who doesn't actually trade his own money came out and was just like, the market's throwing a tantrum. Like we're gonna run 10-year up to 6% and DXY to 150, and crypto will pump only when Americans lose their job and Trump has to print money. I'm like, dude, you don't know what you're talking about. Like, that is insane. Do you know what would have happened if unemployment came in at 4.5% this morning? You know, and these guys got what they wanted. It would have been absolute carnage. Like, so bad. Not a sweep of the low, a trap door. You know, it's these like ridiculous, like backwards ass justifications for like how data needs to come in. You think the Fed is going to be like stiff armed into printing off of like they're not going to allow the market to like stiff arm it, you know, by like ridiculously, you know, running up yields and like hammering bonds forever. Like, and altcoins certainly are not going to pump. Like, here was the justification this morning is they were like, hey, we want, like, the market's going to stiff arm the Fed into, you know, cutting rates, and risk assets want more rate cuts if they're going to rally. So we need bad economic data so that the Fed has to cut rates. I'm like, do you understand the implications of emergency rate cuts? You're not talking about mean reversion cuts. What you're talking about is emergency cuts. You know what happens when you get emergency cuts? Altcoins do not rally. They rally to zero. Okay. So these goofballs don't know what they're talking about. The most bullish thing that we can have is a strong economy and a Fed that is out of the way. Pause. Just pause. Pause. They don't do anything because the pause to me tells me, hey, inflation is under control. So we don't need to hike, and we don't need emergency cuts because we have a strong economy. We're going to rip. That's good. We need to keep threading the needle. We don't want inflation coming back, and we certainly don't want people losing their jobs. The worst thing we can get right now is emergency cuts. We want, if anything, a mean reversion cut, and that's it. But I'm telling you, you cannot afford to have unemployment climbing up. That is a ridiculous notion, in my opinion. Absolutely ridiculous. Study what happened early August. How'd the market react when we missed unemployment?
Yeah.
Came in 20 basis points above expectations, and we tagged 49K. And that's good. That another print like that is going to send your altcoins higher. Are you kidding me? Insane, man.
I think people almost they were like too focused on the short-term reward of like rate, or right? Like,
yeah,
the print's bad, therefore they are going to have to cut rates. But it's like, well, that pump, maybe you get a correlation reflexive pump on beta from rate cuts and yields coming down, but the long-term implications of that are not, like, they're not what sets up a bull run, unless the rate cuts are driven by, I think, you know, basically like political intervention, which I did see something like that, or some that topic come up yesterday on X, about Trump getting involved with the Fed to cut rates. I don't know if it would be an adversarial relationship that would create that dynamic necessarily, but I do think it's possible that you see Trump step in at some point, or rather work with Jay Powell to cut rates, even if, you know, realistically we probably shouldn't be.
But see, here's the thing: is like, how much influence does the president even have over the Fed? It's a totally separate, uncorrelated department. Like, there's not
supposed to be none, but
yes.
I feel like the last 2 years kind of, the line is a lot more blurred than it used to be.
Yeah,
that's fair.
Yeah, and just a couple points. It's just funny too, because if we got a bad unemployment, right, then it would still be bearish, right? Because then they'd be saying, "Oh no, bad unemployment, recession imminent. Told you there's going to be a recession. You got a good unemployment. Oh, bearish. You know, hawkish Fed." Like, so like these guys have just kind of cultivated this environment where like no matter what happens, it's bearish. Meanwhile, the markets have been ripping to the upside for the past 2 years. It's crazy.
They just, as anything is bearish, right? Yeah. Anything, no matter what, is bearish because of something, right? I get it, right? I get it. I understand how to like. I understand the indicators that you're looking at. I understand the reports. I watch them closely. I read them, and I'm telling you, like, you want to know the last time we had emergency cuts, right? And I understand, like, over multiple months how that would bubble us, right? But what people are talking about is this, okay? This is emergency cuts. I will show you right now. And this is not what you want in the middle of a Bitcoin bull market is emergency cuts. We are past that point, okay? So here's what happened. Here's what happened. Here was emergency cuts right here. This right here was an emergency cut. This was the emergency cut. We were looking just fine, right? So here's what we did is we rallied during the Fed pause, right? As we normally do, and we start to get some cuts and we pull back a little bit, right? But then we're fine because we start to pause, right? And we start to pause, right? So look at when we re-entered the pause. We re-enter the pause right here, and a pause is bullish. The Fed is out of the way. Nothing has broken yet, right? Here's the pause, right? Pause is bullish, and then emergency cuts. And look what happens. You really are advocating that people need to lose their jobs. People need to lose their jobs so we can get emergency cuts at this phase of the cycle. Dude, like, no emergency cuts. No, none. None. Pause. Give me pause.
Pause.
Or give me mean reversion cuts. That's fine.
That's the thing too. Like, one, I think people just have a recency bias from the last cycle, right? Because what we saw happen during COVID and how, we saw a crash and then everything bubbled up and, went crazy. But even like when we were paused, like assets, like risk assets, like stock market, Bitcoin, like the market was doing great when we were paused. And it never made sense to me while these talking heads were crying for rate cuts while the market was trading beautifully, right? Like everything was going up. We had a bullish market environment, right? But that wasn't enough. They wanted the rate cuts too. But like it never made sense to me. Even then, I was like, the market's fine when like everything's been paused. Like, why are you crying for rate cuts when the market's been bullish during a pause environment? Like, it never made sense to me. Like, it doesn't make sense.
Yeah, that doesn't make sense. That's the thing. Is it doesn't make sense. So
now everyone's regurgitating. Everyone's saying, "Oh, Bank of America is saying we get no rate cuts next year." One, don't believe them. Right? That's one point of advice. Don't believe
the banks always tell you the truth.
Yeah, like they're telling you the truth, sure. And two, we were bullish in a pause environment, so it's fine. Like, God, man, like, oh,
yeah,
grinds my gears. Grinds my gears.
Yeah, man, they're just waiting for the day that something actually implodes so they can actually have something to talk about. I mean, their Super Bowl was like the VIX spike to 50 that we had in August or whatever. And that was like the highlight of their entire year, like that was like they got like 3 days of glory, Japan liquidated itself and we had a US unemployment miss, back to back. Had a VIX blowout, and then we immediately recovered, and then we were right back to them being Coper sideline oars. So,
can I give a really hot take?
Tommy, boil us. Let's do it.
I think the VIX will break the 2024 high at some point this year. Very spicy take.
That is a little hotter than I expected. I'm not gonna lie, Tommy. That is.
I just think it's a function of positioning. The way the VIX has been trading over the last few months, there's clearly a very high skew towards one side. It's likely that we continue to see VIX trade in this method and just kind of generally gravitate up over time. And I think that will come with the market moving higher on a higher time frame as well.
So 65, 66.
I think we break that this year.
This year. Are you talking about just a quick whoosh?
Probably, yeah.
I don't want us hanging out up there. That's the thing. I don't.
It won't be like a multi-week trend because that's what really breaks markets is when volatility is trading up there for weeks at a time. That's what happened during COVID. That's why, you know, short volatility shops in 2020 just got blown the hell out. I have a buddy who he was kind of doing a little bit more TradFi private equity before crypto. And he said all he remembers from COVID was all these short vol shops just like bodies washing downstream for weeks. But no, I don't think it'll be like that. I think it'll
This is
be
what
more
we
of like,
can't do. We can't do for months. That would be horrible. But I'm down for some entertainment. Just let me take profits on my altcoins first, and then you can whoosh all you want. So, Tommy, would it almost be a good strategy at some point, like in Q2, to buy some like VIX, you know, $80 calls or something, YOLO?
I mean, I kind of like it. It's just, it's so tough to time something like that, right? It really is. I
But
mean,
the
all you
payout's going to be 100 to 1, so you just buy new ones every week until it hits, you know?
no, you could. I don't know if I would be doing, like, it's such a low percentage trade though. You know, I feel like there's a high percentage way to play that, and obviously a much wider tail that you can look for. But it's just kind of my gut feeling based on the way VIX has traded over the last few months that we'll see it break that high this year.
Yeah, we could. We could. This is so awkward right here, man. I hate this. It's so awkward. You know what drives me the most crazy? It's this. Guys, run the likes up. I just checked the likes.
No.
It's shambles right now. Yeah.
Oh, come on, guys.
It's no bueno. It's no bueno.
I think they just don't like to hit the like button anymore.
They don't. They hate hitting the like button, man. It's painful for them to hit the like button.
Hit the like button to earn. Who is building this?
Yeah, right. Get paid to hit the like button. This just scares me a little bit. I'm not gonna lie. Like this. You know what I'm talking about? Do you see?
Oh,
Yeah.
I do see.
I
Interesting.
talked about that on the Discord call this morning. We're like, if you're looking at, you know, Bitcoin like on the daily, like, yeah, it looks heavy, right? It looks a little toppy, looks a little distributive. I still don't think we get that CME fill though. I think we mark that inefficiency move maybe from 80 to 85 if we roll over, right? So yeah, I mean, it doesn't look the greatest, right? We've definitely looked better, but you know, technically we're still, you know, at a range low here until proven otherwise. But yeah, you can't deny that it does look a little toppy, but you know, it's very obvious, I feel like, in my opinion, right? So
it is pretty obvious. Here's the thing too, like, yes, I could see this, but also at the same time, the context is much different from like where we're at within the cycle.
yeah, exactly.
I mean, for example, right? For example, that CME gap was down here, right? So I think the context is all warped. So one, here's our previous all-time high. And for Bitcoin, this was the previous all-time high. And you are so much further out from the Bitcoin halving. Like, it's much different, right? Like, it is not even, like, it's truly not even comparable contextually. Like, if we wanted to actually talk about like a CME gap and properly apply context, it would be here. It would be this one, right? So a fractal without proper context is garbage, right? So if we wanted to actually talk about like contextually which CME gap makes the most sense to compare it to, it would be this one, not that one. See what I mean?
100%.
Where everybody wanted this one back here. And this was actually in January as well, right here. So applying context, this would be Yeah, this one makes a lot more sense to compare, in my opinion. I don't know how you guys feel about that, but I mean, this to me feels you can't just take a naked fractal and be like, oh, well, the structure looks the same. And,
Yeah.
like, I think you need to look at it and say, oh, this was the CME that broke us through the all-time high. That makes a lot more sense than just being like, there was a random CME gap, like still low key in the bear market for Bitcoin,
Yeah, this is more or less like the breakaway gap.
That's what I like to think.
Yeah.
The context of this one makes a lot more sense, but it's just hard to not see that one.
And again, like January, we're used to seeing this, right? Like we're used to seeing a pullback in January for Bitcoin. It's nothing that we haven't seen before. So again, more context where we've seen pullbacks in January to start the year, before continuing higher. So just more data and seasonality kind of timing up like it always does. But people get caught in the day to day. I get it. It's not easy, right? But
yeah, I mean, and looking at if we're talking about this same CME setup right here, I mean, you could very easily look at this and, in my opinion, see some similarities, right? You had this kind of like, 1, 2, 3 in January, 1, 2, 3, and then, we took out the lows one, and then, and then we had another little like, I'll change the color, 1, 2, 3. And then this is, 1, 2, 3. Like I see some similarities here. Like I really do see some similarities here, and I know how many people I remember I was trading here. Like this CME gap was just like, we need to fill it, 24, 20, I'll bid 24, and it just like didn't quite give you that breakdown, So I don't know. It's just such an awkward spot. Like it's really uncomfortable. I feel like there's a lot of fear in the market right now, and I know a lot of people want a little bit lower, right? A lot of people. I get it, but nobody knows for sure if it's going to happen or not. It's just kind of an awkward spot. So you're probably best off just being like, well, you flip 95 to 96K, we're bullish, and you start sliding below our value area low here for a fourth drive into the low. That's not so good either, So I feel like you have a pretty clear plan, but here's the problem with it is like, although it looks heavy, I think that shorting here is like just a horrible RR, like even if it does end up breaking down, you kind of won the trade for the wrong reason. Like that was not good risk management, low key, like you can't short into this level. I'm sorry, you just can't.
I mean, maybe if you want to, if you like, and I said that on the call this morning, like maybe if we lose our local range, get a bearish retest, lower time frame, okay, I could entertain, 80 to 85. I'm not entertaining the CME. Like I'm entertaining that, that FEG sitting right above it between 80 and 85. Okay, maybe we can entertain that, and then you look for a hedge or something like that if you haven't hedged already. But until then, like the same way, bulls got bullish at range highs. Bears tend to get max bearish at range lows. Just is what it is. Been seeing it all cycle.
I just don't even know.
The trend. I'm just riding.
What do you guys think about Sol here?
I haven't looked at Sol in a while.
Maybe that's the alpha. Is the oh my. Oh my.
This is nasty.
I haven't checked this in a while. Someone is saying, get me out of Sol at any price. That is chewed through levels right here, man. That is, there's no mega demand there anymore.
Mega supply.
Yeah, that's for real. That is.
I think with alts that look like that, you really need to be seeing some double bottoms form. I think that's true for really these large cap alts across the board.
I mean, this is one of the worst looking charts in crypto. I don't ever like check on Sol really. I probably should a little bit more. But wow. I mean, that is horrible. I mean, this is your best hope is like, you know, that this ends up being concrete or something. Dude, I don't even know what to say about this chart.
Did you see these comments?
No.
But this one cracked me up. I was looking at Sui yesterday, and it's just it screams. I can look at the chart. You know, you can look at some charts and you can just say like, yeah, crime was committed in the makings of this pump. Sui is literally the quintessential example of that. It's just like this straight up in a straight line, not even a megaphone pattern that you see on it. It really is kind of some of the weirdest price action I've seen on a major. It kind of reminds me of like KNC back in 2022, if anybody remembers that. But I mean, Sui has been so strong. I don't know why you're shorting that, brother.
Yeah.
If you do have a bearish bias, why do you short the strongest token?
I mean, Sol probably. I mean, this is pretty textbook right here, but you probably get a puke here, honestly. I don't know what's going on here. Is there any chance this has to do with FTX at all?
There's a massive unlock in March. I know that may or may not be why we're seeing it, but that has been discussed on the interwebs.
I mean, at this point, I feel like you probably just do this, you know, but I don't know.
What does the profile look like?
Sorry, let me just check this real quick. Sol ETH looks cooked as well, man. Oh my gosh, dude.
That was the relief bounce right there.
Oh my gosh, man. That
looks bad.
The new Giga Kingmaker pair trade just opened up, boys. Long ETH, short Sol for like 3 years. Oh my gosh. Tommy, is this zero? Is it time to study zero on this chart?
I don't know, but it really does look absolutely awful. I mean, that's at least coming. I actually don't want to say anything about this pair because I think I've had some very bad takes on Sol ETH over the past like 6 to 12 months. With the exception of fudding ETH, I have mistraded this pair a lot. But just from a structural standpoint, it doesn't look the best.
How about this trend line? Do we like this trend line?
Cheeto.
I think manlets are going to have to love that trend line.
They're going to have to love it. How about Sol BTC? Oh,
Bart.
my. Oh.
Looks a little bit more salvageable, but
that looks like ETH BTC before it went on a 2-year fucking downtrend.
Louis, try 3-year.
Yeah.
This is somewhat salvageable, I would agree, but this is a scary looking structure.
Or lights out.
And by the way, that doesn't need to be a super, super bearish Sol thing. It could just be like a bullish Bitcoin and ETH and Sol kind of lags, but still grinds up to new highs or something. So let's just be clear about that. But I don't like how this looks, I'll be honest.
Because I think if Sol ETH is going to be breaking down, Sol has been the preferred beta of Bitcoin the entire cycle. So you need to see the baton pass over to ETH for it to be a good thing. ETH's going to have to stop being such a POS.
Proof of stake.
Exactly.
All right, that's not too bad. That's not too bad. You've got your previous value area right here. So previous value area, diagonal trend line retest with some demand below. It's not terrible. I mean, this is a nasty rejection, but double bottom can change everything pretty quickly. Like if you saw Bitcoin flip 95 or 96 here, you'd probably see this just randomly put in a bottom, you know. It's kind of what you have to hope for. But I think as long as Bitcoin is sitting on top of support in this awkward region, you're just going to see something like Sol get pummeled. Like who's going to risk like holding a bunch of Sol right here if you're just trading, not swinging, if Bitcoin is potentially going to lose that range low? You know, nobody, right? And that's why you're seeing what you're seeing is Bitcoin needs to get off the floor or get underneath it and just rip the Band-Aid off. But
you know what these majors that look like Sol, that look like ETH, and obviously a few other large cap coins, look, they need to pit roll. Dr. Outlook style.
yeah, pit roll could be nice. It's about time for a pit roll. What does BNB look like? Is there crime going on right now?
There is absolutely crime being committed on the BNB chart.
Dude, strong. Look at that. Wow. Holding up really well.
The only time BNB has volatility is pretty much during big liquidation events anymore. I've said this before, but BNB actually is the lowest volatility major, even lower volatility than something like Bitcoin and ETH. The only time you see outsized wicks on BNB, obviously it's going to be different when BNB is putting in like a massive candle to the upside, but typically you only see big wicks on BNB when you have liquidation events because it's such a popular collateral coin.
I mean, this is kind of where we need, like this, we could literally be like in here for BNB. That's what it feels like to me.
The only thing, because I've been watching that so closely, I've been trying to, obviously, if BNB is going to pull another run like it did in 2021, I want to catch it being long. So I've had my eye on this one quite a bit. The only thing about it is that ETH moved, I think, like a month before BNB did, from like a trend standpoint. So you'd kind of want to see ETH move before BNB, unless maybe this time is different.
Let's look at
ETH
it.
really is just a cucked POS.
I mean, let's look at it here. So here's ETH down below. Let's mark out ETH previous high.
I guess they were in the same point structurally, but ETH was in an aggressive uptrend versus.
No, you're right.
ETH
was ahead because BNB was at $40 and ETH was in price discovery, above the previous cycle all-time high. So you're probably right to suggest that we would need like ETH to rally. I mean, what we really probably just need is not even really ETH, but just ETH BTC to put in a big move. ETH BTC puts in a meat stick. That's when you're going to see. That's when you're going to see the fun begin on other ones. I feel like BNB is just like probably one of the safer like 5 to 7x's in crypto potentially.
Yeah.
It's not sexy or anything, but like, I mean, look at this. So for example, this was January 1st right here. And here is January 1st, whatever, right there. Like if you can just get this move, right? Let's zoom in a little bit. Just finally a floor, like a big pop. You can get a big pop on ETH BTC, then you're just going to start to see, BNB go crazy, right? It does look like it's really ready to go, man. It should be like really soon, honestly. I don't know if it's going to outperform something like a Pepe, but it's like, for a big L1 crime.
Well, it's one of those things. It's a coin that a lot of people hold, right? I mean, maybe not a coin that you and I are holding, but it's a coin that Binance whales are holding a lot of. So if they are a lot richer, they're going to be allocating that and longing a ton of other altcoins, a ton of other beta. That's really why BNB is so important when it pumps. I mean, just look at, if you even want to add another layer to it, look at the timing of when Matic moved after BNB in the last cycle. It's not a coincidence.
So BNB pumps first, and then other coins follow.
Yeah,
Look like
a
a
lot of
flow.
these coins too, you know, BNB probably seeded them with BNB tokens. So there's a lot of like convexity to that.
So we could look at it like this. So ETH BTC down below. So ETH moves against Bitcoin. We'll put this in blue. And then BNB gets off the floor. Put that in yellow. It's very ugly. And then Matic starts to cook. Put that in purple. Interesting. I mean, look, I think the winning strategy is just own shit coins when ETH BTC moves, you know. But yeah, BNB looks good here. But all right. I think that's about the end of the show for us, guys. The likes were so bad today. Can you just like it before you go?
Smash.
Just give us a little boost. Yeah.
Smash.
Just hit the like, guys. It was a bad show up of likes today. Really bad. Under 300 likes, man. That is, dude, 277.
You guys can do better than that.
That's insane, man. That is insane. Wow.
But we forgive you. We know that you will hit the like button again in the future. Maybe, hopefully. But thank you again, as always, guys, for tuning in to today's episode of Market Check. Just a few quick things. If you enjoyed what you heard today on the panel, if you enjoyed the alpha that we discussed, obviously on where we think the coins are going, as well as other proxies that are very important to the coins, you have the opportunity to join the family. You have a few different ways to do that, right? The first of which being your go-to tool for the cycle, which is the BB terminal, guys. This is a best-in-class product that we are continuing to make the absolute best on the market. So whether or not you are an active trader, right, trading lower time frames, derivatives, open interests, something that I love to do, we have the tool for you. Of course, whether or not you are a long-term investor looking to make more educated decisions on potentially DCAing, obviously other long-term data that can influence investment decisions. We have the tool potentially for you as well. And of course, whether or not you are a degen, an on-chain guy, a meme coiner, we will soon have the tool for you as well. So make sure to check out the BB Terminal, guys. As we will continue to say, the prices of our products will go up as the market does. So make sure to take advantage of them at these prices right now. And we were nice enough to bundle this your go-to tool for the cycle with Because Bitcoin Discord, guys. So come here from the entire team. We give 4 or 5 hours of calls to our subscribers every single day. They also have access to our intimate thoughts on the market as things happen, which also sometimes includes positioning. So make sure to check that out as well. And like I said, we did bundle these things together for you because we are nice people and we'd like to have you guys in there. But honestly, the Discord is getting a little bit crowded. So I can definitely say the price of the Discord will probably be going up sooner than the price of the BB terminal. So make sure to pounce on those now. Of course, whether or not you're trying to hone your educational base or potentially reach trading level mastery, we have a product for you as well. So make sure to check out the BB Academy. Come learn from the entire Because Bitcoin team, how we analyze the markets and ultimately how we trade. And lastly, maybe you've had a tough time stomaching the downside volatility in this current market. Maybe you've just had a tough time picking winners. After all, this has been a very ruthless, last year of market conditions. Well, we have a solution for you as well. If you are interested in having the team manage capital for you, come check out the BB Wealth Management, guys. We have an SEC registered hedge fund. Like I said, you can have the team manage your money for you, and we look to do so in a way that captures the asymmetric history for upside returns within the asset class, while also balancing the downside risk posed in any financial market. So make sure to check out all of the things that I just said over the last 2 or 3 minutes in the description of this video. But yeah, we hope that you enjoyed Market Check. We will be back for another episode on Monday. at 11 a.m. Eastern Standard Time. That's typically when we get started. Of course, we have Market Talk with King Wabi later this afternoon, so make sure to tune into that through X, because Bitcoin account and King Wabi's account will be streaming. Make sure to be following both of them. But that's it from us, guys. We'll see you on Monday. Have a great weekend. And of course, thank you again, as always, and stay safe.